Morning everybody, it's Ross McInnes from Australian Investment Research Services. Thanks for joining us. Focus this week obviously on whether the markets can stabilise after heavy falls last week and a spike in volatility, which saw the S&P VIX index, which measures annualised volatility in the US equity market, spiking up to about 49%. Noting that back in mid-April this got down to average levels around 15%. And in October 08 it got up to 90%. So we've seen the markets really reassess where the uncertainty of what was going on. Reflecting this, the S&P 200 last week, Australian index, closed down 6.8%, just under 4,300. On the day, it looks like we had a little bit more stability on Friday night, with the S&P 500 closing just above that pivotal 1080 level. Today we're looking at the ASX 200 getting up around that, potentially around 4,400, but that's going to be reasonable overhead. Noting that today we are seeing Australian Treasury about the new resources tax, which has been a contributor to part of the sell-off in the last 5 weeks. Okay. In terms of week ahead, not a lot of Australian numbers until Thursday when we receive the March quarter capital expansion numbers. These are expected to be mildly higher, about 1.5%, with the focus on, as ever, on the anticipated capex for 2010-11. But these numbers obviously don't reflect the impact of the resources tax or the uncertainty attached to that. In terms of globally, the focus will be on US consumer confidence tomorrow night, Sydney time, which obviously will be our first major feedback on how US consumers view the new volatility in the equity market. It's unlikely to collapse like it did in 08, but clearly it will be a major factor. We're looking at around a 59 level there from 58.5. And on Friday we have the next run of Japanese data, which will include CPI, unemployment and retail sales. The major issue in Japan remains with deflation, with the annual CPI rate still under at a negative rate of -1.5%. So I look forward to speaking to you this afternoon. Bye bye.